Hello and welcome to another update video on Solana. Well, Solana has nearly perfectly completed the structure we were discussing yesterday around the same time. Yesterday, I shared with you guys the idea that a triangle pattern could be developing here, possibly an ascending triangle. But to complete it, we needed, just double checking where we were yesterday. Yeah, we were already starting to see the market move up here on our 30-minute chart. And then we said, okay, could be like a horizontal line there, and this could be the D wave of the triangle, and then we might get another E wave down. So it's done exactly that. So now we've come to a key decision point because this triangle looks now complete. That doesn't mean it is complete. It also doesn't mean that it needs to break to the upside. But I'm tracking this triangle still. It's unfolded over the last 24 hours, you could say, as expected. We had a move up to the trend line up there, or to the resistance line, which is located, by the way, at around $237.50, which also would be an important breakout point now, yeah. But we've arrived there, got rejected, so we're now back in a pullback, and we now need obviously to see the bulls show up here, ideally in this particular price region, to keep the triangle count alive, yeah. But again, the microstructures are not even so important. I'm just saying this here looks like a triangle. I'm a bit skeptical about it because triangles often don't go the way that they seem to want to go. So I mean, from an Elliott wave point of view, this is a pretty much perfect Elliott wave triangle, an ascending triangle, with even an ascending trend line. Yeah, but that means the bulls now need to show up to keep it valid, right? It's like a triangle that suggests upside continuation. It's just that we often see them fail. It is what it is. So it's not a pattern that we should rely on. It's not like a 1-2 setup to the upside or anything. Fact is, they often morph into more complex corrections. Yeah. So if it breaks, which means a break would mean a move below this A wave low here on the 4th of October, if we break below it at $224, that would not invalidate the idea that this could be a wave 4 correction as per the orange scenario, because we're still holding support. Yeah, it's just the pattern got invalidated, yeah? So it's just morphing from one structure to another. It could easily turn into a more complex correction, like, for example, A wave down and then A, B, C. So A wave, A, B, C, and B, and then a C wave down. Yeah, but again, I often say don't trade the labels. Yeah, even though it played out over the last 24 hours like perfectly, but trade the levels. Yeah, because the levels tell you where support lies, where resistance lies, and we've moved basically yesterday from support into resistance. Yeah, from the orange support zone into the resistance cluster up here. And now we're moving back into support. But again, if the bulls show up, let's say over the coming sessions or hours even, then this could be the start of the fifth wave up. I told you already what the breakout point to the upside is. And even if we go lower from here, as long as we're holding $219.75, which is the 50% retracement level, we could still watch for higher prices. Yeah, and this can still be a fourth wave. It would just not be a triangle anymore, which, to be honest, isn't so important which micro pattern it is. It's more important that the trend holds, right? So I keep you updated. These are the things to watch for today. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, feel free to follow us as well on X for additional charts. You can find a lot of additional updates here. And I asked you today here as well, which coins do you want me to cover today on X? There are going to be some that I normally don't cover. Don't want to cover the usual suspects there today, so feel free to follow us there as well. The link is in the comment section. Thanks so much. Bye-bye.